Welcome to Millennial Money Minutes, where we tackle tough personal finance topics in 5 minutes or less. With your host, Grant from MillennialMoney.com and Matt from DistilledDollar.com.
Hey everyone, today we're going to talk about how to start investing. We get this question a lot, been getting it a lot on Twitter. A lot of people are like, whoa, you give us so much advice, but where can we actually start? And they want to know specifically the places that they can start investing. First off, I recommend that anyone should save probably between $1,000 and $5,000 in cash before they start investing. While I'm a big proponent of investing your emergency fund, you do need to have some cash on hand. I have gotten a few reader emails of people who've immediately just taken their extra in their paycheck and pumped it into investments and basically either had a hard time getting it out or, it's just not cash. So I'd recommend saving, between $1,000 and $5,000 in cash first and keeping that on hand. And then when you're ready to start investing, there's really a ton of great platforms that you can use. Well, I'm a huge fan of Vanguard. Betterment's a good platform as well, even though it charges more fees than Vanguard. I know we're so super Vanguard fans here. Even starting to invest using a number of apps out there like Stash or Acorns, can be really helpful just to get started also. What do you think, Matt?
Yeah, I love the advice for, first start saving with $1,000 to $5,000 in cash. And I would say one extra thing there is just if you have any credit card debt or any sort of debt that's, a higher priority, sometimes that might take priority over investing. But yeah, you might call my approach a little bit more old school, but I just focus with Vanguard index funds. I think it's a pretty quick, easy approach that eliminates a lot of overhead and extra fees. But yeah, if you're really looking to get started, the one thing there is I'll just say, avoid. I kind of fell for the same trap, but avoid that trap of kind of constantly analyzing which to buy, what to buy. My best advice there is pick something that, makes sense. It's a sound investment and just start investing into it. And then over time, your investment strategy might change. But, in terms of how to start, take that first step, make that first investment of, $10 or $50 or $100. And then from there, you can adapt your strategy later.
Yeah, I think that's a great point, Matt. And when we're talking about where to start investing, I think starting with equities, aka stocks, aka owning a piece of a company, is really the place to start. And I think that's one of the fundamental questions too. People are like, I can invest in so many things. Definitely when you start investing in stocks before real estate, before anything else. Get into the market. And great point by Matt. Don't look at it too often. Also, getting into stocks, don't start by buying individual equities. So I've gotten this comment before. A lot of people are like, what stock should I buy? I'm trying to invest. Invest in the market before you invest in individual equities. In fact, I recommend that you don't invest in individual equities until you have at least $20,000 saved in index funds. And then if you do want to invest in individual equities, only invest up to 10% of your portfolio. I've followed this basically rule myself, but over the time that I've been investing, my stock holdings have actually increased just because they've risen in value disproportionately to my index fund holdings. So invest in stocks before you invest in real estate. Don't check it too often. And then just stay consistent. I think that's my last piece of advice. Time will take care of a lot of the work. So you might not see results in the first couple weeks, in the first 6 months, even in the first year. The stocks are pretty expensive right now. A lot of things could happen. But if you stick with it consistently and you keep buying over the next 5, 10, 15, 20 years, when you're investing long term, your money's going to grow. If you're investing short term, keep that money in a more conservative place. Don't put your short term assets into equities. Any final thoughts, Matt?
Yeah, no, that's a great summary right there. Don't try to build Rome overnight. And as you start to kind of like lay those bricks one at a time, you definitely start to build momentum. But yeah, in terms of starting, I think this is the best approach. Just basically, listen back to this episode if you're still a little hesitant, and try to avoid getting stuck in
don't get anxious
researching or
don't get anxious. Don't get anxious and don't get ahead of yourself. That's the big piece of advice.
Exactly. Yeah. So thanks a lot, guys, and hope it was helpful.
Thanks for listening to Millennial Money Minutes. If you liked this podcast, please leave us a review on iTunes and subscribe. If you want us to cover a specific topic, use #MillennialMoney on Twitter or visit millennialmoneyminutes.com.